All right. Hey guys, how's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's look at Bitcoin. Bitcoin, two cycles, subcycle B on the left, subcycle A on the right of 2025, 2021 over here on the left. So this is 4 years ago. We talked about in other videos how every 4 years price action seems to repeat itself, to replicate itself more or less to varying degrees, to various degrees. Shows up on both macro and micro time frames and because it runs off an algorithm. The algorithm is predicated upon human fear and greed, those two powerful dynamics that come into play when humans are trading tradable assets in a public area or public market. Okay, the fear and greed dynamics have not changed in 100 years. So men and women in the 1920s and the 1930s, when these schematics were delineated by guys like Richard Wyckoff and Charles Dow, were also subject to the exploitation and manipulation of fear and greed by predatory interests. And that has not changed in humans today. We're still subject to it. And that's why these schematics have not changed. And that's why we can go back and trace the algorithms for 4 years prior and get a general idea of the trajectory of where the waves might go, regardless of what you hear on the news, regardless of what the on-chain metrics say, regardless of who's buying what. Whales are buying this, and Elon Musk is doing this, and Trump is saying this, and the Federal Open Market Committee is doing this, and all of this stuff. It really, yeah, it has an effect, but those effects are just slight aberrations. They're kind of like detours, like temporary detours off the main interstate. And then once that detour has served its purpose, you get back on the interstate, and the interstate being the macro algorithms. The macro algorithms are king, and that's why stuff like pattern recognition is so crucially important, and because you get the macro atlas, as it were, the whole roadmap of the continent of where we're going. Now, there's a lot of stuff taking place within the streets, within the highways, within the lanes and the freeways and all of that within it, but all of them are governed in a macro sense by the actual macro atlas. And so as investors, it's of crucial importance that we familiarize ourselves with the different patterns, the different forms, which are the macro atlases of price action, and that's what this channel endeavors to do, and that alone will keep you safe. So again, until humans change and they're no longer subject to fear and greed, then we can bank on these algorithms remaining true and keeping us safe. And certainly it's kept us safe since January. Those of you can attest who have been subscribed to this channel and who've made a lot of money shorting and have not blown up their accounts, despite what everyone was saying, right? And where Bitcoin was supposed to go. Okay, well, it's supposed to follow the algorithm. So anyway, enough about that. Okay, so 2021B, 2025, and then we see similar areas. We're just going to talk about this regression trend. We broke down through same area, this watershed moment where we broke through the anchored VWAP. The anchored VWAP, the source is in the same place, the beginning of this pump, and we see the breakthrough here on high supply, and that's what kicked off the macro distributions in this. And so this was effectively called an LPSY, or a redistribution, last point of supply. We had a markdown. Here was the markdown here. Some of these waves are just kind of scrunched together because they're never going to be exactly cookie cutter, but you see the trajectory of the distribution rings true, and then culminates down here in another. We had a longer wick here, of course, and 4 years ago than we did here, and it was immediately engulfed by buying pressure the opposite way, which brought it back up to contest the ice. Whereas in 2021 we didn't it didn't come up nearly as high back up into the preliminary supply area as it did in 2025. But nonetheless, we have similar wave trajectories of redistribution forming. And the most important thing is it's transpiring beneath the ice in both schematics. And so you see everything, just a cursory glance. I mean, you don't even have to know anything about price action. You can look at this and see the similarities. Guys, this is what's going to keep you safe. What I recommend, what I talk to my group about, and share with them. It's so easy to get swayed by what's going on in the news, but if we just focus on the algorithms, if we focus on the price trajectory, we're going to stay safe. We're going to stay safe. It doesn't matter what the news is saying. It really doesn't matter when you get down to it. You know, people think that buyers and sellers actually move price in a macro sense, and it's the price moves along, again, an algorithm that seeks out liquidity pools. And so those liquidity pools are where some of them are much higher than others from years past, but the liquidity pools are still in the same area. And that's where the price action seeks to raid or sweep or grab liquidity. The buyers and the sellers are just the instruments by which this is effectuated. So we need to try to change our philosophy. If you really want to be successful and you want to be safe and you want to be extremely prosperous in trading, then you need to adapt a whole different mindset. You need to think of this in terms of algorithms and liquidity, and kind of get away from the market, the news and this and that, and because a lot of that stuff is, well, it's all catalyzed by the market maker to do contrary to what your emotions are telling you, and so that's why people get killed. So we see the same trajectory in the price action more or less playing out. I have both of these on the 8-hour, and if we play it, of course, I'm going to play 2021B, and we can see what happened here. We see that we're going back down into the micro, or this would be the macro support area. More or less, we can expect this to happen in the coming days and weeks. And it's clear distribution. What it's doing here is it is retesting this neckline. And I'm going to show you in a moment on the macro what this, okay, so we get the idea. So this is a head and shoulders. It's a proper head and shoulders. And so there's no reason why this isn't going to play out in a similar fashion. How it gets there and when it gets there may be a little bit different, but we can expect this sort of general trajectory to come down, I believe, to start creating another shoulder kind of action. Now on the macro, we see this is subcycle. These are the dual cycles from 4 years ago, and this is where we are. This is where we are today. We see that it put up this shoulder here. This is what we were just looking at, and you see it tried to. It was rejected off the ice. That's the main thing, where it's rejected off the ice. Now let's see here. I want to show you something. I'm going to anchor another VWAP. I'm going to do it off the all-time high of the preceding cycle. Okay, see how this came up to a confluence where this was rejected here, and that signaled. This actually signaled the macro bear market for 2022. So we're going to go off of the same. We're going to kind of do the same off of this one now. I'm going to anchor the VWAP off of this top here of this preceding system. And see, we don't have a... see, these are going to probably split at some point. So we have confirmation that this is the macro support line indicated by the volume weighted average price. So there is going to be a massive fight for this. It's kind of like what I talked about before. This is going to come down and contest this this area here, and if it's able to go beneath it, then we're going to have to do a lot of VSA when it gets down here, because it might not merely be forming another shoulder. Because if it's not able to get back up, if the price is not able to get back up into this macro's support area and consolidate like subcycle A did, you see how it did that here? See how it went down here? We had a spring and then it put up a new system. If we're not able to do that, see, this was able to get back up. It tried again to do it here, but it couldn't. It got stopped out and it fell. So when we come down, we already saw how we're going to come down, most likely. If we go beneath the ice, I expect a big battle to play out in this green shaded area. And we can expect another all-time high this year, but only if it's able to come back up and prevail and get back on top of this anchored VWAP. If not, then we're going to see something similar to this, which I guess would make sense. It's almost 600% from 16,000 to 109 Gs, which we had in this macro bull cycle that we just had, right? 600% without any sizable retracements, without any macro corrections. I don't really consider this a correction, you know. What is it? From the top to the bottom. This is 30%. I mean, we've gone 30% already, right? From 109 Gs to where we are now, 27%. Yeah. This is the same kind of correction in both of these tops. And so on this one, now this is also 600% from here to here, from the top of 2021B. This first system retraced 56%. Okay, so that's further than we've retraced. And this one obviously went all the way down to this one had the actual retracement, which we're in danger of having, 76. So that's a proper bear market retracement, 70%. Okay, so we've only had 30% here, 30% here. So we're due a macro bear cycle at some point. Now we could be fortunate and put up another leg and have, as it were, maybe like a triple cycle before we see the greater than 50% correction, or 60, or in this case 70%. All I'm saying is that in either case, we need to be aware and we need to watch this. As far as marking down, this first one, let's say the cycles are juxtaposed. That's a two fib retracement. So from subcycle A to here in 2021B, where this accumulation happened here, this was a 2 Fibonacci retracement. And then, so if we're going to retrace and have an accumulation from there and put up another leg, then 2 would be from us, I think it's like 70 grand. Yeah, 69,000. So we could potentially see 70, 69,000. If we see 70,000, 69,000, we could still have something like this, where a deep spring and then putting up another leg. But that just all depends on if we get, see, if this one wasn't going to do it, it would have gotten stopped out here under the ice. You see what I'm saying? And then all of this would have happened here instead, and there wouldn't have been a subcycle B. There wouldn't have been a B. So that's really what it's going to boil down to, is what we're going to do when we get down to the ice. And the ice is coming. The ice is about 73,000, 75 to 73,000. So we'll look at it there. I'll do more updates between now and then as we get closer to it. But count on this sort of thing happening here. Remember, this is us now. See this rising wedge? You could see it right now. The writing's on the wall. So this is what we're looking at in this wedge here. And so if we do like, say, like a 30-minute forensic on this wedge, and I'm going to get going soon because I got to go. We'll do a 2 on this and see what we got. Actually, I can go off this here. 70,000. Yeah. So the 618. So it's a 618 fib because I'm going off the selling climax here. But if I take it off the this one here, so this would be the secondary to here, then this should be the 2. The 2, yeah, see now the 2 is 70,000. So it's a 618 fib retracement from the selling climax, and from the secondary test, it's a 2, the way we measured it here. So in any case, 6970 is the golden number. And we're gonna volume spread and analyze the heck out of it if we get down to that area. So you don't want to miss any updates. Better yet, check out our Discord trading group, where I try to keep in touch with everyone daily and in the mornings, and then sometimes in the evenings if I have some free time, and upload additional charts and such. If this technical analysis helps you out any, if you've been safe because of following this channel, check out our Discord trading group. If you've watched this video all the way to the end, you must be real serious about crypto and about technical analysis. Kudos, I'm proud of you. Do yourself a favor, check out our Discord trading group. Learn the algorithms, learn the patterns, learn the macro patterns, learn the globe, the atlas of all the streets. And then you won't be afraid of the market maker anymore. You'll be thinking like the market. This is what they go off of. This is what they're looking at. This is where they set their liquidity. How do you think they determine where to set these liquidity pools up? They go off the algorithms. They go out, even the dark pools and the wash trades that you sometimes can't track through the volume because they're hidden, they're obscured. They can't obscure the algorithm. The algorithms are still true. So if you know the algorithm, if you know where to look for the fractals, if you know how far back to go, 4 years back, and look for the patterns, then you can anticipate where the liquidity pools are going to be, because the liquidity pools don't change. It's just the scope and the exaggeration of the waves are different, but the skeletal framework of the waves always go in the same area. It's the Wyckoff distributions. Guys like Richard Wyckoff, Dow, Charles Dow. These guys have drawn it all out. Elliott. So 30, in the 1920s and the 1930s, and nothing has changed. So the schematics: accumulation, distribution, reaccumulation, redistribution, and just subvariants of those. Learn all that in my in our Discord trading group, and we have a very friendly, approachable community. We'll love to have you. Absolute beginners are welcome. In fact, absolute beginners are preferred because you don't have to unlearn about a bunch of bad habits, a bunch of stuff using indicators and everything, cluttering up indicators, lagging indicators and everything. So no problem at all if you like to use moving averages and oscillators and all that. That's great if it works for you, but for a lot of people it doesn't work. It just clutters up their charts and they blow up their accounts anyways in the end. So and they become the prey of the market maker. Learn how to trade with trend lines, algorithm, fractals, pattern recognition, volume, weighted average price. Really all you need. All right. Talk to you guys later. Got to go. Be safe. God bless you all. Thank you for tuning in again. Have a great rest of the day. Talk to you soon. Adios. Bye-bye.